My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Let me ask you a question. If you've been in real estate for a while, chances are you've been, excited about this. You've wanted to get your friends involved. You want to get family members involved. You kind of want to get everybody that you know, like, and trust doing real estate with you. Well, today's special guest is Ben Nelson, and that's what they really focus on is doing deals with people that they really like. They built a very good community of investors. And we're going to be talking about kind of how they go about doing that, how they focus on the relationship first. So Ben Nelson, welcome to the show. Great to have you.
Thank you for having me. I appreciate it.
So Ben, give us a little snapshot, first of all, of what you and your company, Wild Oak Capital, what you guys are up to. We're over halfway through 2025 already. What does the portfolio look like? What do you invest in? What's the asset and kind of the market area?
Yeah, so we primarily are focused on Texas, Oklahoma, and Arkansas, Northwest Arkansas, mostly markets. We love Tulsa. We've got some stuff in Texas, Houston, San Antonio, but really like Tulsa and Northwest Arkansas have been a focus of ours. We just finished another deal in Oklahoma very recently, just closed, we're happy to say. And a lot of that comes through relationships. This was a very unique one in the sense that we picked up a property that one of our favorite property managers was already on the ground. One of our favorite brokers got the listing, and it just kind of became this very quick synergy of, yep, this makes sense for us. We can do a really good job here. As close to vertically integrated as we possibly can be without being with internally with our property manager. So that's really what we like to get after. So we're just over about 1,000 units, about 100 million under management. And all those are sort of shiny metrics, right? It really depends on how you do it. We like to focus on the fact that we are really consolidating and we're starting to really, really hone in on those markets specifically. And it's more based in the relationships that we've built. So we go after it both on a investor side, but also on the professional side based on community. So what does it look like for the people living there? What's that going to look like for investors? But also what does that look like for property managers? Is this something that they're going to do a good job? Is this something they're excited about as well? Starting from the very beginning, we underwrite all of our properties independently with our property managers and say, hey, this is a deal we're interested in. I would love to see your numbers before we share ours. And we very quickly contrast and compare those as well. So that's a quick snapshot. Texas, Oklahoma, Arkansas, we're value add, mostly BC, really interested in building great communities for workforce and growing that basis.
Okay, cool. So what size of properties typically, like how many units? What's the buy box that way?
Right now we're probably between like an 80, 90 to 150, 200 is really our sweet spot. We can, and we're looking at a couple of deals we'll grow with definitely co-GP and some larger stuff for Wild Oak straight. That's really what we do a good job with. That's where we thrive. And we're excited about it. I think we can do a lot of good, and it puts us in the right size communities for us as well.
Okay, cool. So the next question I got is value add. That means a lot to a lot of different people, different definitions. What does that look like for you guys?
I mean, you're right. That's a broad brush to paint with. I think each property is unique in a sense, and I can use an example. So this latest property that we bought, it had a little bit of deferred maintenance, but not much. The occupancy was actually pretty high. But we got in there, and it was very clear that there were some underutilized things on the property. So not necessarily like soffits falling off or stairs are in disrepair. For example, there was a very clear zone where they'd filled in a pool maybe a decade ago, and it's an amazing space. It's a family space. There's a ton of folks there. A lot of them have pets. There's no dog facilities there. There's kids there. There's no playground facilities. So for us, we're like, hey, we can solve something very quickly elevate the place that these folks live and add that. So it doesn't have to be paint all the time. Obviously, we're going to do some paint. We're going to do some roof. We're going to do some deferred maintenance, upgrade a few things, but it's also about upgrading the way that people live in these communities as well for us as a value add also.
Very cool. Now that makes a lot of sense. So you guys are focused on multifamily, value add. You talked a lot about relationships with your team. We were talking a little bit off camera about how important that is for you guys for raising capital bringing on LPs for your syndication. So maybe talk to me a little bit about what you guys do a little bit differently than some other syndicators when it comes to raising capital.
Sure. I mean, I don't know that there's any secret sauce. If anybody can raise money, then great, right? Like everybody has the ability to do it, and if you're providing a return. But we are really focused on building something that people feel like they're a part of the family. And I know that's a little bit cliche, but in the sense that we have conversations, I produced action sports for 20 years, right? I was always on the road, and Red Bull was a main client of mine, Nitro Circus. So I tend to have a different type of client base or clientele, or my friends and family base is a little different than, say, my brother, who is an engineer by trade, right?
Right.
So we try to build these. It's a little bit different. There is sort of a one-to-many approach for everybody, and we do the same. Like we have conversations, but we try to attract people that are very similar to who we are. So we get on phones with them. We have conversations about who they are when they invest and how they want to invest. If it aligns with who we are, I want to be able to pick up a phone call from somebody or receive an email and have them ask a question. I want to be able to return that. We're building a community where we want to spend extra time. So we go on ski trips with our investors. We go, like a lot of folks that I've met that have invested in our deals, I met truly on a ski lift, or I met on a surf trip or hiking or things like that. So it's more about alignment, not just of goals as far as your economics are concerned or just your investing goals, but what is it? Where do you want to go because of this? And I think we try to align a lot more with the trajectory of your life and not necessarily just, hey, can we get you a return?
I like that. So what kind of difference have you seen that make in your raises, in your investor base versus some of your other associates who are also syndicators doing it other ways?
Well, I just think that there is the opportunity. Social media is such a powerful tool, right? And it'll become more interesting with AI and the way that you can crank content out at a moment's notice. And you can shout really loudly, and you can tell a story for a lot of people that becomes really compelling. So the reason I say that is a one-to-many approach of, hey, I don't even know this person, but I'm going to invest with them. That's great. But as far as return investment, I think that's what we're really looking for. Is we're trying to build a place where people are really comfortable coming back to us again and again and saying, hey, we really like who you guys are. So we both know if you're in this game long enough, you're going to do really well on some things, and some things are going to be really difficult, right? Like we have properties in our portfolio that are on both ends of the spectrum that have done way overperformed, and some of them we have to work every single day to do a good job there. And I think that's the most important part, is if you're working with somebody or you try to invest with somebody based on a shiny deck and some stuff you learned on Instagram, cool, man, make your own decisions. But we're looking for people who want to invest with us constantly for the good and the bad, because they know who we are. Like we have integrity, that we treat our folks and our residents really well. We treat our management company really well. And we know in the aggregate, we're going to win long-term, or we believe that anyway. We believe in the aggregate, we're going to win long-term because of who we are, our integrity, and how we operate, and not just because we can put together a shiny deck.
So Van, a lot of folks these days, like you mentioned, they're going through troubled waters, to put it nicely, when it comes to the deals and what's going on. It sounds like you've had some home runs and you've had some struggling deals. How do you have those difficult investor conversations, especially with people that you've really developed quite a deep relationship with, when things aren't going according to plan? What have you learned through that part of the process?
I think, to take a step back, I'm really fortunate that I am very proud of the people that I work with, right? Like I'm fortunate to work with my youngest brother. He is one of the most deeply passionate people about integrity. Same thing for Bonnie, same thing for Shane. So for us, it's about telling the truth. We all have professional careers before and during this part of our lives as well. And if you can't have hard conversations with people looking in the eye and say, hey, this is what's going on. I think watching people who try to dance around stuff, I think that's where we've seen most people get into trouble the most, is they say, well, we'll just try, like, yeah, occupancy is a little bit shaky, but there's this, but there's like, hey, listen, for example, in San Antonio, occupancy dropped by 15% or more.
Wow.
Over a very short period of time. There's a lot of factors and a lot of reasons for that. We don't necessarily get into that, but across the board, and that wasn't something that we were necessarily immune to either. So having conversations about, hey, this is the reality of where we are. Here's our plan, right? So our approach always has been, this is something I've learned early on, is yes, there may be an issue. Here's all the things that we're going to try to do to solve it. but we're not going to try to hide from the issue. We're not going to sugarcoat it. Like, this is what's going well. This is what's not going well. Here's our next plan to try to fix that. And I think as long as you provide that respect for people, I've very rarely had an issue with somebody saying like, this is why this is happening. Like, if it's bad planning, that's one thing. Like, hey, we misread this, or we misunderwrote this thing, or we trusted this person do this and they didn't show up. So here's how we're going to fix it. If you have a real honest,
establishing that solution.
Yeah.
That solution in addition to the bad news, right?
Yeah.
Here's what's going on, and here's what we're going to do to try to fix it.
Yeah.
We want to keep you up to speed on what's happening. Yeah.
And then honesty and integrity, man. Like, that, just don't sugarcoat it, don't hide it. Just be a real person.
Yeah, no, I mean, easier said than done for a lot of people. I mean, so many people are just sticking their head in the sand and hoping it solves itself, which it doesn't. Yeah.
Which is, I think, to your point though, is the other reason why we're really, really adamant about knowing a lot of our people, right? Like, that we have conversations, that we have real relationships, is because you can also hold each other accountable to those things. It's really hard to hold somebody accountable and to ask them, hey man, what's up? If you didn't actually know them that well beforehand, you may have had like a screening call and then you gave them their money. But if you don't have an established relationship with somebody you're giving money to and it goes sideways, what skin do you have in the game with them? Either what skin do they have in the game for you to actually do right by you?
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
Yeah. Yeah, fair enough. What was I going to ask you? Ben, a lot of people, especially in the heyday a few years ago, like they were getting into these deals, they're going to, especially value add type properties where they, throw a little lipstick on there and jack up the rents and refinance, and interest rates are crazy low and all this good stuff that they could get.
Party's going to go on forever.
Yeah, get in and out of a deal in 2 years and double everybody's money and all that kind of good stuff. And that almost became, quote unquote, the norm of the pitch deck. Have you guys adjusted your approach, or are you more midterm, long-term focused? Where do you guys sit on your exit plan for your properties?
Yeah, I would say that we were very hesitant to get caught up in that short-term debt program or floating rate debt program. All of our debt is still fixed rate debt. I think that's honestly, it's a tool. It's a fantastic tool, and it works for a lot of people. I don't necessarily want to say, but for us, we're very conservative in that way. We usually underwrite to about a 5-year. It's a syndicated program. We want to roll out. That's probably obviously tying people's money up for a period of time, but we also always underwrite to 7 and 10 just to see if we have an additional program. And that's part of that, having a really honest conversation. Cyclical nature of real estate. If you're not having a conversation with somebody who says, hey, we have a 5-year plan, but real estate is cyclical. Also, who knows what's going on in the world, right? Like, we've had several black swan events in the last year that who knew that we were going to bomb Iran, which could go one way or the other, right? Like, I'm just throwing that out there. But it's one of those things that you don't necessarily have that. Understand that we have a plan. Here's how we've underwritten it. Here's how we built our buffer zone. But if we get to year 4 and it makes sense to hold for another 2, or if opposite way, if we get to year 2.5, and suddenly the climate has changed and it makes sense for us to get your money out or refi, we're gonna be really honest with you, but we're gonna make those decisions. So we don't. Everybody says they're a conservative underwriter, right? But like, we also have a very strong opinion on providing these like really strong IRRs. Like, hey, you're gonna make this amazing amount of money and 3x your money in 36 months. I don't think that the climate's there for that anymore. But I also don't think that we're necessarily super unique. Like, we underwrite to 7.5 years to this thing. I think that's a fool's errand to say that you know the future. If anybody thinks they know the future, there's no way. So we make our best guess. We do the best job we possibly can to secure the longest rate debt we possibly can. Because if some other thing changes, i.e. insurance, i.e. taxes that all have changed recently, and you have a much better leverage position to play from. But if you're all of a sudden you're underwater on your mortgage and your taxes and your insurance go up, that's why we're seeing a lot of these things go on sideways.
Yeah, definitely. No, very well said. So Ben, when it comes to raising capital these days in today's environment, I completely understand like that personal connection, finding other people that are into crazy sports stuff like you like to do. And I mean, that's that makes a ton of sense. What do you find works best for you for connecting with new investors besides word of mouth? I mean, obviously, I'm sure there's a lot of referrals going back and forth, but what else do you find works best for you?
I mean, I just said it. Social media is a very powerful tool. I personally like LinkedIn more than anything else because I think you find some people there that you can have a more honest conversation. I think people are also paying attention more. I think, Instagram, Facebook, they're all really interesting. They have their place. I have this conversation with my brother Eric all the time. He's extremely active on Facebook and on Instagram, and he does a great job. But I would say that it's not just action sports. I think action sports like skiing, or there's sort of an aspirational nature around that. But I find there's also a lot of connection around the things that are additional to that. So like skiing is one thing, but teaching your kids to ski is also a really interesting thing, or teaching your kids to go camping, or just being a dad, right? Like there's a life shared relationship program in there that you say, these things are our values. This is what's interesting to me. I can have a really easy conversation with you. We can go grab a coffee or a beer and like connect. And I find that there's a lot more of that. I try to really be a personal interaction with LinkedIn. Like we reach out to somebody, it's far less about like, hey, there's my stuff. It's like, I think you're cool. I would love to spend 15 minutes with you on a call and just see if we jive. Like that's the step one. Like I'm not going to sell you anything. I don't want you to sell me anything, but I've made more personal connections in that respect in the last year than almost any other way as far as a, one-to-many approach.
Lead gen. Oh, that's interesting because you're into the action sports. LinkedIn is typically thought of more of as a professional networking thing. How do you find the guys and gals on LinkedIn who are also in your tribe, being crazy action sports kind of folks? How do you?
Find it's not as hard as you think. I mean, it's just like anything else. And as far as networking is concerned, is having conversations with people that are similar to you. But you'd be surprised how many folks Sales Navigator is an amazing tool for finding for certain people, but truthfully, most of it is people who are connected to people. I would be like,
they're in the action sports, so chances are a lot of their connections are as well.
So I'll call one of my friends out. There's my friend Jamie Starr, he's been connected in action sports. Like he started Spyderco and has been like, he's an amazingly smart individual. And he also happens to be super charismatic, an amazing athlete, and knows business. And so if Jamie knows somebody, I'd be willing to bet, and he like speaks for them or like has commented on some other stuff, I'd be willing to bet like if Jamie digs that person, I bet I would probably get along with him as well. So it's paying attention to like who's doing what. It does take a little bit of time. Yeah. But and I think you can see a lot of that too. I also resonate personally with a lot more like personal content. And I think LinkedIn is coming around to some of that. That's where I think Facebook and Instagram has that a little bit of an advantage, because you get to be a little bit more personal. But I think people who are telling stories about how their personal journey, this is what they've got going on, like it's becoming a little bit more of that. It's almost business Facebook. I hate to say it that way, but it's becoming the ability. And I find that people react far more positively and end up sharing or having more conversations if it's not the super polished, like I'm a professional person, like this is my journey, man. Like I built a 20-year career throwing people off mountains or jumping trucks. Like that's still a profession. It just doesn't have to be as polished.
Yeah, I love that. Well, thanks for explaining how that works, man. So as we're wrapping up our interview here today, where do you see yourselves, you guys, and Wild Oak going over the next 12 to 18 months?
We're buy mode, but we are looking to acquire. Obviously we want to work with, we say no to more deals than we say yes to, but knock on wood, we're starting to see a little bit of a turn in the market. So for a very long time, we didn't see anything that penciled at all. I think that's changing quite a bit. And I think our partners are seeing the same. So whether it'll be a straight up deal just with us as Wild Oak or co-GPing with some of our preferred partners, we expect to make several more acquisitions in the next 16 months. And and just do right by our investors and provide a solid return, and hopefully meet some pretty cool people along the way.
I'm sure you will. So Ben, if people want to connect with you, where should they go?
Yeah, go to LinkedIn. So Ben Nelson 303 at LinkedIn if you want to check me out there, or wildoak.com. You can find us and all of our information there as well.
Awesome, Ben. Thanks so much for being on the show. It's been a lot of fun.
Thanks, Dave.
All right, everybody, take care, and we will see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.